Welcome to today's morning report on Friday the 5th of May with me, Rich Bear Market Analyst at Hand Tech Markets. It's Non-farm Payrolls Friday, and there's a degree of consolidation but with a slight sort of risk negative bias going on. The decline in the oil price has been a real sort of impact seemingly on risk appetite, certainly across the Forex, with the Canadian loonie and also the Aussie dollar under pressure. The yen has started to find a bit of support as well, and gold. So let me just show you a few charts that sort of reflect this. First of all, starting with the oil price, as I said, sharp declines. It actually rebounded today a little bit, but basically last few weeks, what a significant move down from that sort of 53.75 high that we had. Big sort of over 20% decline in that market in the last sort of 3 weeks, 4 weeks, and that is being reflected a little bit in the fact that the reflation trade is being questioned, certainly, and the dollar hasn't been all that great as a performer, but what we are seeing is a move back into a little bit of the safe haven place today. Gold bouncing after being under significant pressure actually itself, and also the yen as well. Now, I sort of mentioned the dollar having been under pressure in the last few weeks. You can see that it is now back to and challenging this big long-term uptrend again. As the euro broke out yesterday, sterling was also positive. Sort of helped to drag that dollar chart lower, and it's really under pressure. And I'm going to show another chart here. This sorry, not this one. This one. This trade-weighted dollar versus the Treasury yield. Tends to be a very close correlation between the two, but the Treasury yield is rising on the 10-year. But the dollar is falling now, and that is interesting that that correlation is not as strong as it once was. So that is, as I said, an interesting fact that, as I said, we've got this Treasury 10-year Treasury yield holding up pretty well, as is the 2-year, sort of breaking back above that 130 level, but the dollar is still under pressure to the downside. Interesting. You've got, as I said, non-farm payrolls today. That is the main focus for markets. And there's a lot of data points coming out of the payrolls report that we now sort of consider. Now, the headline number is expected to be 185. There's possibility certainly of an upward revision from the 98,000 last month. But once the headline data has been sort of digested, the markets will then go on to the average hourly earnings, which I think is expected to come in at 0.3%, which is mildly down actually on the year-on-year, back to 2.6%. But yeah, it would still be a positive number though today, if you got 0.3% on the month. Now, the underemployment level as well, that's been falling steadily, back down to 8.9. Look at the levels it saw in 2006, 2007, around 8 to 8.5%. I think is where we'd start to see a real tightening in the labour market in the States. There is still room to run, but you do have the unemployment level, which is back at 4.5%, which is generally where the Fed thinks it's going to be for the next couple of years. Also sort of look at the labour force participation rate as well, 63%. If that rises, the expectation of unemployment to increase to 4.6% is sort of that would come hand in hand with the labour force participation rate rising, because the more people entering back into the labour force would push that unemployment rate higher if they can't get the jobs. So there's quite a lot of aspects of the payrolls report that we need to watch out for today, but that is certainly the sort of main focus for markets as the session moves on. And then we're looking at the French presidential election, which is expected to come in quite resoundingly as a Macron victory. Now, my chart today is euro yen. What we have seen in euro yen is a sharp move higher in euro yen, because the yen has been weaker as the euro has been strengthening. But it's now back into this key band of overhead resistance, 123 to 124 area. You can see these highs from November, December, January, all peaking out around about that 123.30 level to 124. 123.30 is also that old closing high area. Yesterday we saw a closing high at a level that's not been seen since May, but certainly that that sort of rally that we've seen could come under a little bit of pressure, because we've got the RSI, which is strong, yes, above 70, but again beginning to roll over on the stochastics. You're sort of up into this resistance band in front of the French presidential election. Could we see the euro starting to sort of just waver a little bit as the sort of market buys into rumours and possibly takes profit on the fact or sells on the fact? So just keep that in mind. Today we're lower on the euro yen as the market has just sort of rolled over a touch. On the near-term technicals, you see that uptrend is now being tested. Momentum indicators again sort of beginning to deteriorate slightly. The RSI back into the low 40s. That's not been seen for a few days, and MACD lines and stochastics as well. So there is this sort of suggestion that the bull trend is being tested now. You got the resistance at 123.63 from yesterday, and it'll be 23.60 sort of 5 area really. But generally speaking, the market has just rolled over a touch in front of this French presidential election, and it'll be interesting to see how the yen also reacts to payrolls today, because yen is a big mover on payrolls reports. So a sort of marginally weaker than expected payrolls report would strengthen the yen, and that would help to sort of drag this one lower. So we're beginning to find up a bit of resistance on the euro yen, so it would be interesting to see how this one moves in the next few days. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.